Hey guys, and welcome to the Working Money Channel. So I saw this on Twitter today, guys, from @LuckyJohn_XRP. Save cash, but what if cash is losing value? And what he's referring to is this article here, a statement from Billionaire Barry Diller calls the stock market great speculation and urges everyone to actually save cash, which is kind of laughable considering the cash situation right now, right? Losing value, the Fed pumping money into the economy left, right, and center. So here's the article. Billionaire Barry Diller calls stock market great speculation and urges everyone to save cash. Billionaire media mogul Barry Diller on Tuesday urged investors to maintain sizable cash portions following the stock market's robust rally from the beer flu-induced lows in late March. Personally and professionally, every nickel you can, keep it wherever it's banked, the chairman of both Expedia and digital media group IAC said on CNBC's Squawk Box. Diller noted that IAC in August announced a 12% stake in MGM Resorts International, but he said the roughly $1 billion investment made sense because the pandemic had ravaged the casino and gaming industry, providing the company an attractive opportunity in which we would never lose our capital there. So despite what he's saying, he's still buying a stake in a resort. So he goes on to say, because of this moment for bad reasons, we got the ability to invest in something like that, Diller said. But generally, I think for any speculation, I think that the market right now is great speculation. I would stay home. And so the bigger point here is, I keep finding these examples of these big billionaires, telling us to stay away from the market. We saw just recently, within the last few weeks or so, Warren Buffett has bought shares in Barracks. CEO of Apple, Tim Cook, just recently dumped his Apple shares. And there's this as well. Billionaire Ray Dalio has two pieces of advice for the average investor. If you guys haven't seen this, it is linked in this article. So a lot of interesting things going on right now. These guys are telling you to save cash, I suppose, for the average person who might not understand cryptocurrency. This is probably the right move. At least you won't have your cash in an investment that could plummet over the next few months. One of the key points here, he says, is that the election is going to be a significant cause of uncertainty for investors as well. So that also is coming up in November. The market right now, Bitcoin on the daily trading at 10,475. Not too much movement since yesterday. Low price movement, low volume there. For XRP as well, we are still basing in this level of support. If I put it here on the hourly, we can see, boy, I drew these levels out yesterday, and I drew them out when we were around here. If I can just show you guys, we were around here, and I drew this box, and look at how tightly, look at how accurately this trend is really just kind of still trending in this zone here. Okay, we got the bottom level at 0.229, the top level here at 0.234, and XRP right now trading at 0.232. So still vacillating in that zone as well. S&P 500, because it is all connected, guys, is looking pre-market a little bit up today. And we did see a bit of a rebound on moderately high volume, but these candlesticks to me don't look promising. We had gapped down a few days ago. Yesterday was an all right day, but this trend is still looking like it will be going downward. That is my opinion. We are making lower lows, lower highs. And so for Barry Diller, he is not lying to us. I mean, there is a problem with the economy, but to put your money in cash, that's debatable. Of course, you and I know that. We love our crypto. Gonna keep moving though, guys. This from Whale Alert at Whale Alert on Twitter. And apparently about 500 million XRP, 499,999,979 XRP, which was approximately $115.8 million, was transferred from Chris Larson to an unknown wallet. And Crypto Knight down here writes this. Chris probably watched the debate of BitLord and Sam and thought to himself, you want to see a real dump? Hold my ledger. That's a good one. Don't know if you guys caught that debate with BitLord and Sam. It was very entertaining. Got to give a hand to both of those guys for putting that on. Some people down here, suggesting, is it a reallocation of funds? What's going on? And then Chris Larson actually tweeted this out. As some of you may notice, I moved an XRP wallet to NYDIG. Now, I don't know if this is related to this move here, but he did say he recently moved this to NYDIG. I've known the founders for a while and I'm impressed by their security and top-notch institutional standards. This is truly a custody 2.0. Check them out, and then he links the website there. So could that have been him moving his XRP over to a custodial solution, something that he trusts? Of course, I believe this transfer was actually from his personal funds. I don't think it was related to Ripple in any way. I could be wrong on that. Don't quote me on that. If anybody knows for sure, please do put it down in the comment section. But anyway, I think we cleared this up with Chris Larson here saying that he is moving to this new custody solution. Truly custody, he calls it, custody 2.0. So interesting to say the least. Check him out if you guys are interested. This guy's from the Cryptic Poet at One Cryptic Poet on Twitter. Ripple partner Currencycloud and Tribe Payments have now joined forces. So Currencycloud, the leader in providing B2B embedded cross-border solutions, and Tribe Payments, a tech company dedicated to deliver the future of payment technology across the ecosystem, have now partnered to deliver complete transparency to foreign exchange costs charged on international card transactions, whilst also giving customers access to multi-currency wallets. So for too long, there's been an opaqueness around foreign exchange, whether that be what you pay using a card abroad, or when a small business is trying to receive payments made in a foreign currency. According to the European Central Bank, banks across Europe earn hundreds of millions of euros a year from overcharging small corporate customers of foreign exchange services. In some cases, those rates can be 25 times higher than for big, more sophisticated customers. And guess who's coming to save the day? Currencycloud and Tribe, obviously. Currencycloud, a Ripple partner, as I reported on a couple of months ago now. And this partnership has been developed to give Tribe Payments partners access to real-time wholesale FX rates. Tribe partners will also be looking to offer unique name virtual accounts in 35 currencies, enabling the ability to receive, store funds, and make payments to almost anywhere in the world through Currencycloud Spark. Through a pre-integration solution with Tribe Payments, the process of offering comprehensive banking services will be far more efficient and straightforward. And so these guys are looking to streamline this for SME, small and medium-sized businesses. This is going to be great. Obviously, another step in leveling the playing field. The technology speaks for itself, and the partnerships, I think, are doing a lot of this legwork, are doing a lot of the grunt work here, right? You know, partnering with other companies. Currencycloud runs on RippleNet technology. Now they're partnering with Tribe Payments, and what they can do now, what they can leverage based on the resources they have, is far more powerful than what they were able to do, you know, before the partnership in an environment where multi-million-dollar corporations had a monopoly. So great news here. We're seeing the democratization of payments happen before our eyes. Even if, you know, Ripple and XRP aren't named in this article specifically, you just have to put the pieces of the puzzle together to realize what is really going on here. So I wanted to thank the Cryptic Poet for posting that. Another one here, guys, from DJ Peter Vass at PeterVass6 on Twitter. Something happened, but I don't understand this. Well, let's go through it and let's see what's going on. This article here from cryptomonday.de, and it is in German, so I do have to translate that. Ripple partner and ConsenSys test Mikro-Finanzinitiative to plug a $19 billion hole. According to the website of the Ripple partners Finastra, the platform, an ambitious microfinance initiative called Trust Machine in Kenya, intends to pilot to focus on eliminating the funding gap for SMEs and to create 50,000 new jobs. In addition, Finastra plans to address issues of equality in financial services and the financial inclusion of non-banks around the world. So it sounds like this, another attempt to democratize payments, actually in this case funding for SMEs, small to medium-sized enterprises. Finastra and ConsenSys want to start a new microfinance initiative. So fintech giant Finastra, which is partnered with Ripple, of course, they partnered with them last year, has a mission of spreading innovation around the world as part of its open cloud platform strategy and aims to bridge the funding gap for SMEs in Kenya and inequality in access to diminished financial services with all the new opportunities that would result for people. The company believes that the most efficient way to reduce the number of people without bank accounts around the globe, currently 1.7 billion if we're counting, is to fight poverty with an increase in employment. So think about this. If you can bridge the gap for funding, you know, this is difficult for small to medium-sized enterprises because they just don't have the resources. If you can do that and you can actually create more industry, then that essentially creates more jobs, and that's what they're getting at up here, 50,000 new jobs with this new technology that would essentially help these businesses get these loans. The SME funding gap in Kenya and other African countries that Finastra aims to fill is a whopping $19 billion worth. To this end, the company launched Trust Machine, a microfinance initiative. And then here are some of the partners here with Finastra, of course, a Ripple partner in the middle. Guys, I will link this article in the description if you want to read the rest of it. So that's what's going on here, it looks like. And Africa, a continent that needs a lot of this innovative technology in order for them to kind of, emerge in this new financial landscape, hopefully glorious and victoriously. For now, these companies are doing what they can to democratize payments, to make sure that these SMEs around the world get the proper technology in order to be competitive against the big players in the space. And again, guys, this is all thanks to RippleNet and the technology. What they are doing is changing the world, and it's so small, when you think of what they're using, the XRP token, and you think of what it does, okay? It's a cryptocurrency, but it's fast, and when it's liquid, it can be very, very powerful to exchange value, monetary value, across borders. Not only that, it is super, super, super cheap to do this. So think about this for a second. In isolation, this technology, seems like, okay, yeah, that's kind of cool. But then when you actually think about the implications, when you think about all the partnerships, what can actually change in the world because of this technology, that's the part that really tends to blow my mind, especially when I see new use cases for XRP and all the potential in the future, all the new verticals that we're going to see as well. That to me is what's really remarkable. I wanted to thank DJ Peter Vass here on Twitter for posting that. This next one, guys, from Poochie1967 here on Twitter. And this goes to show you that they are very, very careful, or they at least want to be careful about what they call this. Misleading term stablecoin should be ditched. This coming from the ECB. The president of the ECB is Christine Lagarde. We know Christine Lagarde has a relationship with Brad Garlinghouse and Ripple, the company. Let's see what they mean by this, though. So now Christine Lagarde is the head of the European Central Bank, and the European Central Bank has said the term stablecoin should be replaced with something less confusing or potentially misleading. Now, we know stablecoins as USDT or Paxos, DAI, USDC. There are many of them, and usually what we know them as tied to the greenback, tied to the US dollar. Of course, there are other stablecoins around the world tied to other world currencies, but we're familiar with Tether. Tether's kind of the most popular one. The Eurozone's primary financial institution, though, said in a report on Tuesday that a properly designed and well-regulated digital asset could live up to the same name, but that existing examples fell short of the intrinsically stable money substitute that the term stablecoin implies. The ECB's 30-page report says the growth of stablecoins in Europe could result in their increasing use as a new payment method or as an alternative store of value. The term stablecoin refers to digital assets that are designed to have minimal price fluctuations. Now, we know them as Tether. We know them as, the stablecoins that are pegged to the USD. They have minimal price fluctuations, and that's because they are pegged to fiat. Well, fiat, when you look at it, a dollar is a dollar is a dollar. When you look at it in isolation, but when you compare certain fiats with other fiats or with gold, that's where you see the fluctuations. What they're saying here, though, is that these coins should have minimal fluctuations, generally by being backed or pegged to assets such as fiat currency or gold. While the ECB says rock bottom interest rates likely remove such incentive for users to hold value in stablecoins, at least for the foreseeable future, it suggests consumers are still in danger of being confused or misled by the name. Now, guys, I did a video just yesterday about about this whole stablecoin thing, and about XRP. As an example, I used XRP being stable at $50. Now, XRP intrinsically isn't a stablecoin. Okay, it moves with the market. It moves based on supply and demand. I mean, we have seen that. But if there is enough demand to fulfill supply at $50, it could reasonably, arguably, stay stable at around $50, give or take. And we just use the number 50 because that is the relation to fiat that we can understand, that we can all wrap our heads around. So is this the same kind of argument that the ECB is making here? As regulatory principles are established and approaches are defined, the term stablecoin should be replaced by a choice terminology to shift the emphasis away from the issuer's promise of stability. Unambiguous phrasing would better distinguish stablecoins from fiat currencies and would serve to also differentiate various types of stablecoins. For example, collateralized stablecoins from algorithmic ones, the central bank said. So right now we have stablecoins pegged to fiat. What they are suggesting is that there could be many different kinds of stablecoins pegged to other things. Stablecoins that stay stable in the ecosystem based on supply and demand, And now what I'm surmising is, could it be that since they do want to use XRP and since they do want to have it at a high enough price, in yesterday's video, by the way, I will link it up here in the right-hand corner, I forgot to mention that, if they want it to be the coin that transfers value, the choice coin that needs to be that high price, do they have to categorize it as something else? Is the term stablecoin too imprinted in our brain as a one-to-one to fiat? That's I think the idea that I'm trying to get across here. And I have a feeling that the ECB is realizing that, yeah, you know, the term stablecoin refers to a coin that is stable in price, but maybe that's the wrong terminology. So I thought this was an interesting article, guys. I will link it in the description. I wanted to thank Poochie1967 for posting that. And guys, what do you think? Put your ideas down in the comments section. What should we do? How can we create a new terminology? This is kind of like, you know, education all over again. Or rather the crypto industry has to educate the world governments about cryptocurrency, and now maybe there's going to be another subtopic regarding the education of the terminology revolving around stablecoins. Should it be ditched? Could we change it to something else? It certainly is up for debate. Put your ideas down in the comment section. Guys, I saw this from Martin Volk at MartinCPVolk on Twitter. This with regards to Jed McCaleb. And you know what he says? He says we don't need more regulation. No. All we need is clarity. Now, you can love Jed, you can hate Jed. This article is not really about Jed specifically. He was just interviewed for the Coin Market Cap blog, and I'll link the article here. You can read his whole interview if you want. I just wanted to get down to this part here with regards to the actual regulatory clarity when he talks about that. What there really needs to be is not so much regulation, but clarity. And so those are two very, very different things if you think about it. Regulation is restrictions, not allowing one to do as they wish. You must follow the regulations. But clarity is certainly something else. He goes on to say, I think what Melta meant is that there needs to be regulation because it takes away the uncertainty. And I agree with that. But regulators can also just say, hey, this stuff is regulated, or hey, this stuff is like in this category, and then we're fine. What there needs to be is not so much regulation, but clarity. That would go a long way to making more legitimate people get involved and just allowing people to do things that they are scared to do or were too unclear to before. Clarity essentially means here's the green light, go and do what you wish within these parameters. And you see Jed here is saying more legitimate people would enter crypto. We're hearing this narrative more and more. It's the regulatory clarity that is keeping the legitimate people, i.e. businesses, financial institutions, governments, Wall Street when it comes to crypto trading. It's this that is really holding people back. And once we see that regulatory clarity, I don't know how many times I've said this on this channel, once we see the regulatory clarity, that is when the money's going to come in. That's when we're going to see things really start to pop. And what company wants clarity more than all others? In my opinion, companies like Ripple, of course, have been regulatory compliant since the beginning. Ripple is seeking to enhance due diligence of its XRP2 subsidiary. This from XRP Crypto Wolf. And again, just goes to show you how important regulatory clarity is for this company, how legitimate they are, how they want to be perceived in the public's eye as a legitimate cryptocurrency company. So according to a recent posted job offer that describes all the details of the new position at Ripple, a potential candidate must have profound knowledge of the most important anti-money laundering regulatory framework, and then gives a description of that. So of course, this just goes to show you too that Ripple is doing what they need to do. They're hiring all these positions in order to be as regulatory compliant as possible. Somebody specifically with anti-money laundering knowledge. Their perfect candidate will be a certified anti-money laundering specialist with strong data research skills. Whoever gets the job will be responsible for screening Ripple customers and enhancing due diligence for its XRP2 LLC subsidiary. So this person, screening potential Ripple customers to go along with the guidelines of proper AML and KYC rules. Gonna keep moving though, guys. This from Mike Manfield at Michael Manfield on Twitter. Ripple partner, and now we're talking about Temenos. Everything will move faster and cheaper. And you know what Temenos has just announced? This. Okay, this from Finextra just about an hour ago. Temenos makes a 90-second onboarding pledge. That's right. The simplicity and unparalleled speed of the Temenos onboarding process combined with KYC and AML checks helps banks and credit unions increase conversion rates that drastically reduce operating costs. Temenos Infinity and the leading SaaS omni-channel digital banking product covering customer engagement from acquisition to accounting services through the long-term retention. The solution will be demoed today during Temenos' leading digital event, Synergy Online, on September 23rd, which is today. So Temenos has integrated Temenos Infinity with technology company Prove, which offers pre-fill and identity authentication to give financial institutions a fast and effective way of onboarding and authenticating customers, opening accounts online using data gleaned from their mobile phone carriers. With Prove's platform, financial institutions can identify potentially fraudulent activities, for example, from the presence of a burner phone or SIM swap fraud. This gives the authenticating party a trust score that helps them separate potentially suspicious activity from legitimate transactions. And they have given a 90-second pledge for onboarding clients. Derek Corcoran, Chief Experience Officer at Temenos, says, "We've always focused on creating frictionless and convenient customer experiences that also help protect the banks and credit unions from fraud. Our new fully functional and secure account opening experience, leveraging Temenos Infinity together with Prove and Plaid, has allowed us to do just that. Temenos Infinity can help financial institutions accelerate customer acquisition and deposits to drive lending and revenue opportunities throughout the organization." So they want to be more efficient as well. Of course, getting into this space, KYC AML is going to be one of the biggest hurdles, I think, for new and emerging fintech companies that are going to be utilizing cryptocurrencies, that are utilizing blockchain technology in order to be able to service their clients. And Temenos, guys, of course, a Ripple partner, so they already know this game. They are already Ripple enabled. They have been Ripple enabled for about 4 years now. Now they've just announced the 90-second onboarding pledge. So amazing news here, guys, from Ripple partner Temenos, a very important asset to this space. And guys, did you see this? Okay, I saw this from Real XRP Boy on Twitter at boy_XRP. Interesting times, 100%. Time will tell how governments will allow this to unfold. This with regards to China, the digital yuan, and the new emerging technology that's coming out. So he took this from omfif.org, okay? And let me read you this, guys, because I found this interesting. Alipay and WeChat wallets store renminbi exchange in and out of bank accounts, but as the PBOC, the People's Bank of China, has made clear in recent announcements, these will soon store the digital currency electronic payment known as the DC/EP or the E-CNY, which is the digital yuan. The Chinese digital currency that is being tested in Shenzhen, Chengdu, Suzhou, and Zhongyang, I think is how it's pronounced. The contrast brings into focus the new Cold War that Ferguson has talked about. Imagine if, say, 2 billion people along the Belt and Road trading corridors start using Alipay and WeChat wallets instead of the traditional systems, is what he's referring to. They may begin by using their own currencies, but could shift to the digital renminbi if it offers speed, convenience, and person-to-person transfers. A trader in Africa may soon find it more convenient to order goods from a Chinese partner via WeChat and settle via Alipay. And if they can settle instantly with their Chinese digital currency, or to be fair, Libra or something similar, then they will find themselves accepting the same in payment. Let's continue. Not everyone would cheer such a development. The dollar's destabilizing dominance gives the U.S. the ability to use the international payment system as an arm of its foreign policy. The real and serious implication of replacing the existing payment systems with the new infrastructure based on digital currency is that no clearing and settlement means no transactions going through the international banking system. So, no transactions going through the international banking system means that the U.S.'s ability to deliver soft power through SWIFT disappears. For anyone interested in the evolution of the international monetary and financial system, this deserves attention. We get very carried away in this space, I find a lot of the time, and distracted with FUD regarding Ripple and XRP killers. But what's really happening here, guys, and this paints a very enlightening picture, is that there are more killers of traditional banking systems in the space than we care to acknowledge. What they are saying here is that by utilizing these channels through Alipay, WeChat, and different wallets, okay, more technology is coming out, and so countries would essentially be able to trade efficiently and large values, may I add, through these systems, circumventing the classic SWIFT system. Now, if there isn't a replacement, if there isn't a way to fight back, i.e. Ripple and XRP, could this be the end of the US dollar? Well, we've already talked about that, and I think the writing is on the wall there. But also the US's ability to deliver soft power through SWIFT, that also disappears. I think SWIFT is a redundancy in this day and age. Ripple and XRP are going to be there to save the day. It seems as though RippleNet is the only technology that can help combat against these things, that can help combat China, their trade cold war that we're currently living through. Guys, it's all going to be a matter of the regulatory clarity. Let's not forget the ECB also, saying already, kind of putting the seed in our head, look, we should rename stablecoins because not all of them are going to act the way you think stablecoins should act. Could they have a particular coin in mind that they want to kind of reclassify at a stable price once everything comes to pass? And could it be XRP, guys? All very, very interesting questions. I wanted to thank Real XRP Boy here on Twitter for posting this. And finally, this from Val Jester Loch here on Twitter. Thought this was funny. I find it ironic that a lot of Bitcoin people who were wanting freedom from the government are now wanting it to be a global reserve currency. I'm lost here, but then he posts another tweet here in his thread. But I know what will be. This from Ripple Insights from back in 2017. Ripple says we remain hard at work, focused on adding exciting new features to the RCL and further improving the performance, stability, and quality of the Ripple open source codebase. Most importantly, we remain more committed than ever to the simple goal of making XRP the world's reserve digital currency. Ripple mentions it in their insights from back in 2017, and I have to play you this clip. This is hilarious.
I feel like I almost have to give a trigger warning here. If there are any Bitcoin maximalists who wandered into the room, some of this material may be a bit triggering for them.
Triggering for Bitcoin maximalists? David Schwartz never ceases to humor me, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.